Welcome to Pressure Points. Our topic is Meta earnings. Before I jump into the pressure point, I want to just quickly recap. They beat revenue for the June quarter by a couple percent, operating income by about 9%, guided the September quarter to be, if you assume they hit the high end of their range, up 20% year over year. And previously, analysts had expected revenue to be up 15%. So overall, strong quarter, especially in the face of what happened with YouTube last week, where expectations were for low 20% growth, and it came in like at 13% growth. So business is on track. This, of course, is all noise related to the bigger A topic, which is AI. And just before I jump into that pressure point, I do want to mention Zuckerberg said something on his prepared remarks, which resonated with me, and him commenting that many, if not most, tech CEOs can't stop talking about AI. And one of the reasons why it's just the most exciting thing going on. I would add to that, I think it's the most exciting thing going on since the PC or potential electricity. And so this is all relevant to what I believe will be continued a 3 to 5 year bull market here powered by AI. I don't even think we've gotten out of the third inning in this. And so let's jump into the pressure point, which is the CapEx, and specifically related to core versus generative AI. And so CapEx guidance was at the high. They kind of inched that up. Previously 35 to 40 billion for this year. They said it's going to be 37 to 40 billion. If they come at the high end of that range, it will grow about 50% year over year. And that tends to get investors anxious about what's the cost of this and are they spending too much. And Zuckerberg basically put the hammer down and said that that you have to think about in the context. They have core AI, and then he talked about generative AI. And core AI is getting some benefit from some of their infrastructure spend today. That's basically infusing AI in all the existing products. It's helping advertisers do more, get a higher yield from their advertising, better targeting, better content creation. It's helping recommendation engines, things like that. It's all important. It's having an impact on their growth, but it's not the most exciting part that Zuckerberg talks about. And he makes the distinction between generative AI, the core versus generative. And he describes this as being the real opportunity, the big opportunity. This is things like their AI Studio product or Meta AI, this chatbot that they have that's still nascent, and they kind of want to move those to 1 billion users years down the road, he said. But ultimately, this is the biggest opportunity. It could be something related to Llama and how they monetize that, not only through consumers and advertisers, but also through businesses. And so that was the pressure point, essentially telling investors, don't worry about CapEx. This is the right thing, because the real holy grail here is generative AI opportunities, and we haven't even seen it yet. And I think most investors would leave that commentary feeling more confident in Zuckerberg's vision and specifically the money that they're spending in AI. So that's the pressure point. I'll just throw on one postscript point, which is related to Reality Labs. This, of course, is the segment that has been losing a ton of money. It's probably going to lose about 20 billion this year in operating income. That's up from a loss of like 16 or 17 billion in 2023. So this is just they're just incinerating cash in this business. And of course, when investors think about this and think about the reality of what Quest looks like, and people don't get too excited about it, it just continues to beg the question of why are they doing this? And Zuckerberg shifted the conversation from kind of the Quest to more of these glasses. This is the Ray-Ban. They're on their second version of the Ray-Ban through Luxottica. That's their partner. Google also wants to partner with Luxottica. So I think that there's some tension between those companies, and just a better understanding from both Google and Meta that there is this ambient computing wearable glasses opportunity, taking computer vision and generative AI, and that can really be a mass market product. I think about what Google showed at their developer day in the spring related to Project Astra, and it is that kind of an opportunity that I think is going to be profound when it comes to the future of Reality Labs. So investors aren't ready for that. They're not ready to get excited about Reality Labs. I'm starting to get excited about it because I can see how this could be a mainstream product. So that was the pressure point, core versus generative. Overall, solid quarter, solid outlook, and most importantly, a compelling vision around AI that I think investors will continue to support and get behind. On behalf of Pressure Points, bye for now.